Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Now let's take a look at the gold market. Well, on the gold market right now we have a bit tricky situation because if you will take a look in our weekly research, you will see in analysis of the weekly and monthly charts that gold has created the opposite patterns, and in fact they should lead market to the in a different ways. So in monthly chart we have the bearish grabber, on the weekly chart we have bullish trend, and have side by side two bullish grabbers that and weekly patterns suggest as the target, they suggest to erasing the monthly pattern. At the same time, the trickiness of the situation stands with the overall sentiment of the investors. So if you will take a look at the COET report, recent numbers, you will see that the recent rally that we have since the September, from this area approximately, this rally has been supported by real purchases of the investors. So we will take a look at the positions of the speculants, the speculative positions. You will see that the long position even has been contracted. Also in the SPDR fund, we also do not see any inflows. That's why, as we have seen millions of times within the year, that any rally that hasn't been supported by the real purchases is doomed. So sooner or later, or maybe even sooner, it should fail. That's why, despite what patterns have been formed on the weekly chart, we should keep in mind that maybe they promise really significant rally. But we should keep in mind and do not forget that we should treat this and rely on these patterns with caution. We should be a bit suspicious about these patterns. At the same time, this contradiction between the monthly pattern and weekly pattern hasn't reached the major point yet. It hasn't reached the focus, because market hasn't yet approached to 1180 top, where stands the invalidation point on the monthly pattern. That's why this is not the question of the coming week. It's probably I will postpone this resolving of this task on the later time. At the same time, in the short-term perspective, market easily could continue move slightly higher without the breaking the major bearish monthly setup. And the nearest target that market could reach stands approximately at 1155 area. So we have, as we have discussed on Friday, we have the target of this A, B, C bottom 618 extension here is approximately in the same area. Also, guys, we have the harmonic swing. So the framework of harmonic swings tells that if market breaks the harmonic swing, in our case this is the breakout to the upside, market usually tends to double the distance. So it means that market could pass in the direction of the breakout the double size of the harmonic swing. So on Friday, market was stopped somewhere in this area. Right now, you can see that market has exceeded the harmonic swing, and it means that the target based on this tool stands at the same 1156, 1155 area. At the same time, guys, if you'll take a look at the daily chart, you'll see that market has hit the major fib resistance 1142 and almost has hit the daily overbought. That combination creates the stretch pattern, and maybe a bit later market will continue move higher right to this area. In the short-term perspective, it could show some bounce down based on the bearish pattern, and maybe later market will proceed to the 1155 by some ABCD pattern. That's possible, but in the beginning of the next week we probably should be ready for this retracement down. On the hourly chart, we see two levels where retracement could stop. The first level stands around this area, 1125, confluence support, and combination of monthly and weekly pivots. It's around 11.27. So 11.25, 11.27, that's the first area to watch for. Second area is 11.15 range. This is the major fib support and weekly pivot support one. So as you can see, gold market right now provides a lot of chances for trading. So the careful traders could just wait when the stretch pattern will work out with some bounce, and then later trying to take the long position, use this drop and buy this dip for possible taking the long position with 11.55. That's the first approach. More active traders could think about, scalp traders could think about the trading the daily stretch on the bearish side. But for that purpose, we would better to get some reversal pattern on the hourly chart. For example, as you can see, this top stands at 1618 of this retracement, so maybe market will form the head and shoulders here, or something of that sort. As soon as any pattern here, reversal pattern will be created, you could try to take the short position with some retracement here or here. So you could try to trade this pattern on the bearish side of the market. So you can see a lot of different opportunities for trading, and you could choose what is better suits personal to you. So because it depends on the personality and the personal assessment of the risk. So that's a bit personal moment. But currently, gold market really gives different scenarios that could be traded. So that's been said, although the bearish context, long-term bearish context on the gold market is still valid, nothing stands against the possible small upward continuation, because if market will hit 11.55, it will not break the long-term bearish setup. That will be just some motion inside of the setup. And currently, guys, mostly we have the bullish setup in the gold market, despite what numbers on the COT report we have, despite how fragile it is, because weekly trend is bullish, daily trend is bullish. Yes, we have the short-term stretch that probably will work out, but and if it will not break the daily trend down, we probably still will have the bullish context. That's why we could trade the bull market on the bullish side until we will not the breaking of this scenario. So that's our current view on the bull market. Let's see what we will get on the next week.